All right, how's it going, guys? Sting here. Today we're going to be looking at the DeltaPrint candles, and we're going to be looking at what they are, how we can use them, why they're different from normal footprints, why they're not, all that good stuff. And today I just wanted to do a quick thank you to Bybit for sponsoring this video and helping us put out this series on Spaceman BTC's indicators. So let's get right into it. So I think this is a pretty good example just to start. Right here on the left-hand side, we do have a BTC 4-hour chart with a weekly profile. On the lower right-hand side, we have a 30-minute chart with a daily profile. And on the upper right-hand side, we have a DeltaPrint candle. And what that is it's basically a candlestick. And I can show you what settings I actually have on here. The overall indicators I have are just volume, the Spaceman BTC key levels, DeltaPrint candles, and then VWAP and VPVR, which is this profile on the right-hand side. So while we're going to be focusing on the DeltaPrint candles today, I think it's really important that you use these in conjunction with other key levels or profile scripts or things like that. So you can see that I use a lot of my levels from a higher time frame profile and a lower time frame profile, and then as well as the key level script. So those are the kind of things that I look at, whether it be support and resistance, MAs, or whatever you use as support and resistance or whatever you deem important. It's important to use these candles in confluence with one another. Sorry, my dog is going kind of crazy in the background. So we'll go ahead and start with just the candles, and then we'll kind of bring it all together. We'll start by looking at the settings. Okay, so for BTC, I have a 50.6 size. I do have it set on Delta, small location. I don't have the statistics, so you can actually toggle statistics right here, and you can see how each individual bar will show the total trade volume and delta. This is very important and this is very useful. I just flip it on and off as I see fit, just because it does make the chart a little bit messy. So until we come up with a little better way for that, that's just kind of what I do. And now let's talk about ask and bid versus delta. So if we were to go and ask and bid, it's going to split these columns into two different things now. And we have an ask side and a bid side. So we'll go ahead and spread these out a little bit more so it makes it a little bit easier to read. Okay, now what this is basically showing you the amount of orders that are going through on the buy side and the amount of orders going through on the sell side. And when we're talking about a footprint or a DeltaPrint, we're purely talking about market orders, right? We're not worried about orders in the book because that's going to be something more you look at on a heat map or a depth of market or a ladder. So these are all going to be orders that are already executed and they were executed at market. So those are two very important things to understand. So when we talk about the bid side, what do we mean by the bid side? Well, if we look at a ladder, we have buyers and we have sellers, and we have the buy side on the left hand side and we have the ask on the right hand side. When we look at the bid side, this means we see orders that are traded into the bid. That means sell orders, right? Sell orders executed at market that are hitting down. So you may have $1 million on the bid, and you may have a 500K order that hits at market into that. And that's what we would see print right here on the bid side. So we can kind of see, negative 4.7 million here, 4 million here, negative 7 million here, 6 million here. So now what would we expect from a delta? Now delta means difference, right? So we're looking at the pure difference between market orders. This is using the same exact calculation we see here, except it's just the difference in the bid and the ask. And this just kind of gives us a little bit of a different view of not total volume traded at that area, but very, very key points where there was a lot of volume done in one direction. And while this may also be a point of very, very high volume in general, as they do tend to be, that's more so what we're looking for is one side of that volume done. So now if we were to imagine these, right, this negative 4.7 million and this 4 million, well, the delta on that is about negative 0.7 million, right? So we're going to see about 700K negative here. That's what we would expect to see. And same thing here, right? The delta is about 300K in there versus right here above this, we have 0 traded into the bid. We have 8.5 million traded into the ask. So the delta on that is 8.5 million because we have no difference, or sorry, we have no bid volume traded. So it's just purely the ask volume. So that's just a quick example between bid and ask. And I prefer to leave it on delta just to kind of stick out the key points. So we can kind of see exactly what we talked about right here as soon as we switch it back, right? 600K is highlighted, and sorry, just this is where we're looking right in here. 600K on the lower end, negative 600K, negative 300K, and then we do see that 8.5 million, which is that big delta print, right? So when we talk about delta, we're purely talking about the difference between market orders. Okay, so why is this useful? Well, when we look at the normal candlesticks, we'll go back out to a normal chart, we can only kind of see so much, right? We see these wicks, we see these moves, but we don't really know what's going on behind the candle. A lot of people will see an SFP or a sweep of a high or a low and say, okay, yeah, this is a trap. I'm gonna, put my stop loss right above that. But what if it was just an aggressive move up that just stalled out, right? There are actual key ways where we can tell, who is trapped, what's going on at those key inflection points. And that's where the delta print or the footprint really comes in handy. So like I was saying earlier, you kind of want to use it at key inflection points. So where we're going to be looking at the delta print is, in here, right? When it comes back down into the weekly open, when we traded down into this weekly low, this is where we want to be looking at the delta print. And on the even bigger time frame levels, I did actually a quick snippet of me watching it live while we're in here, and we showed a trade example of taking this long up to the POC. And if you want, you can go ahead and take a look at that video after, and I'll go ahead and recap that as well at the end. But it just kind of gives you that extra layer of depth when you're at the market and gives you that confidence that you need to not necessarily pull the trigger always, but show you where your invalidations are, who's actually fighting, or that tug of war that's going on. And I do kind of mention that sometimes it is information overload, and you don't want to be staring at these things all the time in the middle of nowhere. But at key inflection points, when the market is really moving and we're not just stuck in a two-tick sideways range, these can give a lot of information, a lot of key clues of what's actually going to happen or what players are thinking or who's stuck. So when they can be useful, I already kind of talked about, key levels. That's when you really, really want to be paying attention. So let's just take look at a couple examples here. And this is one trade that we were kind of looking at in here on the video recap. So we'll go ahead and look at this one down here and see what kind of signs we could have seen. So firstly, we want to look at, the move down, right? This was a pretty big move down, and this is kind of where the DeltaPrint runs out of data here. But this is a pretty big fast move down with a lot of volume, right? We can see it on the volume below that this is, abnormally high volume compared to whatever else we're seeing. You have big delta prints. You have 27 million, you have a negative 41 million, you have, negative 99 million. There's some really, really big volume being done here, and it's very fast. It's happening quick. It's aggressive, right? That's the kind of things that we want to see on a delta print because those are the biggest edges that we can get with this type of tool. So first of all, the key level that was breaking was this 59,500 level, which comes in about right here, which is a key weekly low, right? So we can see as it breaks that, we have a huge sell into that, and it's just massive selling, and it kind of snaps back into that level, and we can find resistance there, right? So we can see that there's a lot of delta building up in here, and this is where a lot of people can get chopped up because they're just looking at every single print, every single tick in here. You want to be waiting for the key inflection point. So when we get this big dip back down, right, this big 29 mil, that's a good signal right there, right? When we spike back up and you see this defending, this big delta coming into buy, and then all of a sudden these big sellers step in. And one thing you'll notice when I talk about it happening in real time is we can actually see more out of it when it's happening in real time because we can see that tug of war. We can see the buys and sells interacting at each other. When we see it, past, we don't really know if that delta was done all in one print. We don't know if that delta was, it just quickly printed and smashed away, or if it traded over that 3 or 4 times and there was, a tug of war, a fight going on there before one side eventually puked. So that's one thing that is a bit different when you're looking at it back in hindsight. But watching these things develop can give you a really, really, it's almost like a gut feel, right? Because the same patterns don't necessarily always repeat themselves, but you kind of see these similar context points. You kind of feel out what these players are doing, and that can almost give you either more confidence or, you know, um, even just a sole reason to take a trade. So again, we can kind of see the sweep of the slows. We have these big delta prints coming in down here, but the really, really key one I wanted to take a look at is this sweep back up, right? Because this is where, you have this sweep of the lows in here. It doesn't quite get down to the main low, which everyone's looking at. We have single prints in here, which could continue to be filled. So it stops just shy of that. And we don't really have a huge, huge trap relative, right? Yeah, there's a lot of volume being done in here, right? If we look at the total candles, but it's not relatively big volume on a trap at those lows, right? We saw 30 mil here, we saw 30 mil here, we saw negative 50 mil here, we saw negative 60 mil here. So yeah, 16, yeah, that's volume, but there wasn't a huge trap there. So okay, so you see this start rallying up. There wasn't a huge trap on the bottom end. And then all of a sudden, aggressive buying on the top end. And then it gets smacked down with the 16 mil, and we enter right back into the range, right? So these are the key points we want to be looking at. And what doesn't happen can also be a very big, very, very big tell, right? Because what we would have wanted to see is one of two things coming into this level down here, right? And this is again, going back to that other video, if you go ahead and take a look at that, I was kind of talking about the two scenarios, and these are the two types of trade types that we'll be looking at in this video, more basic trade types for this type of tool, are the breakout and then the trap. So for a breakout, we would want to see aggressive selling, and these big relative, sizes, we want to see them sustained. We want to see them being printed here. Big sells, big size, right? And they keep going down. And that's what we look at for the breakout short is we want to see big volume being done, big size, not getting defended, right? It's just eating through those bids. It's aggressive. It's, very strong. That's the kind of stuff we want to be looking at. And we didn't get that. Now, okay, so if we didn't get that, what else are we looking for? Well, we're looking for the trap play. The trap play would be something like this, where again, you want to be seeing this kind of size, this relative, where it goes down like this and then it rebounds, right? You see a couple of these big prints like we did right in here, and then immediately gets bought back up. Now, let's just realize what these delta orders are when we see these big prints, right? There's really only four types of things that these orders are. You have long opens, right, which would be seen as a big delta buy. We have long closes, which would be seen as a big delta sell. We have short opens, which would be seen as a big delta sell. And we have short closes, which would be seen as a big delta buy, right? So those are the four types of orders that we're really seeing going on right here. So if we imagine what's going on at these trigger points, right? When we see a sweep below a low, you see massive selling coming in. Well, it's either new shorts opening up or it's a stop run, right? So it's basically longs that have their stops just below those lows and the market orders are going off from being hit. So, well, that means, and keep in mind, this is a very simple example, right? If you're saying one or the other is going to happen at every inflection point, you pretty much have both going on at every time. But it's just, you kind of want to see what the more dominant side, what the bigger players are having happening there. So if we see this sweep and nothing goes off, there's no stop losses. Well, what makes it reverse? Who's going to puke when it enters back into the range, right? What's the fuel for that move? Those are all the kind of things you have to be thinking about. And when we see it again here, we can very clearly see that even though it didn't have that big sweep, it didn't have a big thing, there was no fuel then for that move because it unwinded. It winded right back into, sorry, let's just delete this real quick. It unwinded right back into the weekly low, the previous weekly low, and it trapped right on the upper hand and it got smacked right back in, right? And again, not a huge sell, but relatively, it was okay, right? We saw 14 mil buy, 11 mil buy, 8 mil buy, and then 16 mil smacked it right back down into the range. And that's kind of what we're seeing now. So if we kind of keep going through this, and we can kind of see, if you were to look at every single delta print in here, you would have gotten chopped the fuck up, right? But now, when we see it come in here, strong prints, right? 10 mil, 3 mil, 5 mil. We see a little bit of a sell here, but it gets chewed right through. See a little bit of a sell here, it's chewed right through, right? Strong delta on this move up. And again, see big volume coming in here into this level of inflection. So we start seeing a selling point. Now, okay, is it going to stall at VWAP? Huge buy right here that sends it right through VWAP. And now we can see that this order right in here gets defended, right? This player, and I mentioned this a lot on the other video that I was talking about, is these orders, when you see a big player step in, they're going to do whatever they can to defend these levels, to hold these levels where they are, right? They don't want to puke. If it's a fresh position opening and they're, they have 30 mil there, you'll see that, sometimes it'll get hit down to 15 mil and then it'll refresh right back up to 30 mil on the delta because somebody's stepping in there. So key players are stepping in there to buy. And those are things that we want to be looking at. So when we see this right in here, these two big prints in here, and we come back down and it's also VWAP and we see this kind of bouncing and defending here, we can kind of tell, okay, maybe this does have a little bit more room up to POC. And these are obviously very small ranges, so small scalp trades. But these are the kind of things you want to be looking at, right? Like the big prints into key levels. Okay, so now we have big, strong volume into POC, a bit of a blow off here, right? We have all buy volume, all big, strong buy delta in here. And then all of a sudden we have some sellers smack down in here, 16 mil here, 6 mil here, 24 mil right here, right? And that sends it right back down. And then we can see again, it tries up again, and that 24 mil smacks it right back down here, right at POC. So those big orders, those big players stepping in right at big key inflection points, that is what the epitome of the delta print is to me, right? Seeing what's happening at those inflection points. Yeah, you can look at it in the middle of nowhere, and yeah, you might find little 10-point scalps here and there, but understanding what those players are doing at the big key levels is why this tool is probably, one of the best things for day trading and swing trading if you're looking for these types of setups. So we kind of talked about what aggressive buying looks like. We kind of talked about what a trap looks like. Let's see if we can find a very good, clear example of both. Just kind of going back through this chart, and then we can see what it would look like on the On the weekly chart as well, or on the 4 hour chart. Shit. Okay, so I can't actually go back because of data. Let's see if we can play with the tick size a bit. All right, so that gives us a little bit more data. All right, so this was actually a really good one because this right in here was a nice wash and reaction. And sorry, we don't have the little candle here just because I'm going back a bit. But in this video, we talked about, we're coming into this weekly low, and the two types of trades we're looking at this value area low are going to be A, the breakout trade, or B, the trap, right? And there are some other advanced trade types, like we have delta imbalances, we have delta unwinds. But for the purposes of this tool, just to kind of show you guys what this tool does, we're just going to stick with these two. And basically what we can see happening is we see a very, very aggressive move down. So we see big selling, negative 66 mil, negative 23 mil, negative 5 mil, negative 13 mil, right? So this is the breakout that we're talking about. Very fast selling, very aggressive. It's on strong delta. We see a little bit of a hesitation in here, but it's really just one-sided, very strong delta on high volume, right? So that's the kind of breakout that we're talking about. Now, when that type of breakout happens, when price comes to revisit that breakout, we look at one of two things, right? We either look at that breakout getting defended, those big sellers that were selling on the way down are going to step back in to try to stop price from getting back above them. Or if they does get back above them, then they're going to be in some pain, right? So then they're probably going to start unwinding their positions a bit, and that's probably going to give us some more fuel on the upside, right? So those are the kind of things when you're noticing is, yeah, it gives an initial trade at the breakout, but what happens when we revisit that level? What happens when players who were previously involved in that trade are stepping back in again? And that's kind of what we see perfectly right here, as we see very aggressive selling on the downside, negative 70 mil. We see some stalling, right? It's starting to get some buy pressure now, 60 mil on the buy side, negative 30 mil, negative 30 mil, positive 40 mil, negative 20 mil, negative 50 mil. And then all of a sudden we see this massive print right on the bottom, a negative 56 mil, right below the value area low. Well, is that someone buying? Yeah, it could be, right? It could be a very, very big buy that comes in and smashes in, but it's more than likely a stop going off, right? We haven't been to that level in a while. It's probably an area where people are going to put their stop losses. So more than likely, this is a stop going off right here, right after a huge 81 mil sell. And all of a sudden, then we rebound right away, and it's all one-sided action, right? After that stop goes off, we all of a sudden see a bunch of buyers stepping in. Okay. And they were big buyers. There were some pretty big buyers to get above these sells, right? So we can imagine that a lot of this selling was puking. A lot of this initial selling was probably longs or shorts opening. And then a lot of the rest of the selling was probably longs puking, ending with long stop losses, right? And then we see that those buyers after that exhaustion step back in and kind of take this back up. Now, price kind of comes into that previous breakdown area and the POC. And this is kind of beautiful the way this plays out because we can really see these big players here step right back in here, right at the POC, right where they smacked it down. And this was kind of the initial trade I was talking about is, yeah, you could take that long on the trap, which was what we were looking for, right? When it comes back and you see this aggressive buying in here, because essentially when this buying happens in here after this kind of exhaustion move, you want to see this defended, right? You don't want to see price get back that low there because then that means there's no fuel on this. So you can basically take this initial long in here with price defending this, and you puke if this gets back below this price and this starts to unwind. And you don't want to keep your stop loss right below these lows because you could always get these wicks or whatever, and you could always get an additional trap. But it's a good idea to use a DeltaPrint to kind of come up with areas of invalidation or kind of areas or clusters of where you see fresh positions opening or defending happening. You're like, okay, if this gets blown out, I probably don't want to be in this trade, right? That is your thesis for this trade, or that is your invalidation for this trade. So when we see this happen right here, we see this aggressive buying, you can take this long in here, and as long as this buying doesn't get blown out, right, you basically want to be in that trade targeting this selling or this POC, the first trouble area. So that's exactly what happens. It unwinds into this trouble area, and all of a sudden you see this big, 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 big buying, and then 30 mil sell, and it just smacks it right back down and unwinds further, right into the low, right? And as soon as we get back below this level, you see a couple big sells. As soon as we get back below this level of what I was talking about, what you want to see defended, smashes right through it, and we just see this massive unwind, massive, massive unwind, right? So 60 mil sell, 40 mil sell, and it's just all unwinding here into the lows. And this is where we see that kind of climax event where we see this delta now, a lot of delta being changed, like changed hands right here, a lot of volume being done. So while we want to be using delta at the extremities, this is a really, really good example of how you can use it in between it well at key levels to show you when the initial kind of exhaustion or initial kind of traps fail, right? So it's two-part. You want to be using it at the initial point, at the initial level, and then seeing when those actually fail. So like I said, the last thing I just want to cover is just real-time prints versus, seeing it in hindsight. So when we look back at the current prints being kind of done, we'll go back down to a lower tick size just so we can get some more granularity. Right, so as we see this kind of developing in here, we can see that we have this blow off into the POC. It's kind of come down and come towards the VWAP. And as we see this develop, we can see, as price passes over these deltas are going to be changing. And this is what I was kind of referring to earlier is because these are 30-minute candles, you really want to be using this on a bit bigger time frame, on like daily levels, weekly levels, that kind of thing. You can use it lower time frame if you use lower footprint candles, right? So if you're using a 5-minute footprint or 1-minute footprint, you could use it on 5-minute, 15-minute, 30-minute levels. That's all good and well. But right now, because we only have the capability of doing a 30-minute candle, you kind of want to make sure you're using this at really, really key inflection points, because as price trades through these levels are going to get washed. So we don't know if the 17 mil was all one order or if it happened over, 5 or 6 times of price going back and forth and building up delta, right? And then additionally, when price right here is coming in, we can also see how this order is reacting with price coming into it. How is it, tug of war with the sells and buys? Are we going to see the 17 mil chip down, or is somebody going to step back up and defend it? So those are a few things that you can see real time that you may not necessarily see when you're looking back at a delta print. So yeah, it's all good and well to say, okay, yeah, this is a good trap. There's a big sell here, but there's also something to be said about watching these candles develop real time and understanding the emotions or the kind of context that's going on behind these pushes and pulls, behind the buys and sells, what the delta is really telling you. And honestly, if you can combine this with profile or any other kind of structure key level things, it's very useful and can easily be one of the biggest things that changes your trading. I appreciate it, guys. If there's any other questions, let me know, but that'll be it for now. I am going to do a second part, or this is a previous part that I've already done, about watching this trade unfold along that I was talking about, how it washed out into this low and why we were looking to take it up to POC. Also the invalidation, what I would have been looking for if it did come back down and wash out, which it did after. So it also does give a good sign of, playing both sides. But yeah, that's pretty much it for now. If you have any other questions, feel free to hit me up in the Discord. Take it easy.